The government is finally open, but the damage isn't done. Congress did pass the bill, the president signed it, and federal workers are back on the job. But according to an Axios report that I read, the effects of that long shutdown are going to be felt for a while. That means benefit delays are still kind of baked in as far as SNAP, Social Security processing, WIC, and other federal programs that are behind and just won't snap back instantly. No pun intended there. But agencies do also have huge backlogs. Some offices weren't just closed, they actually lost staff temporarily, and a lot of systems were totally frozen. Travel disruptions are going to take time to unwind too, because even though air traffic controllers are back, schedules and staffing are still playing catch up, so flight issues might hang around. Housing data didn't get collected. CPI for October wasn't measured. Jobs numbers weren't collected. BLS literally had no one to send out in person, and those gaps are obviously a major issue. And all that matters because these missing numbers is what the Fed does use to decide on rate cuts. We heard from several voting and non-voting members that spoke this week, and the theme was basically a surprising number of them still believe the labor market is stable. And here's the reality. Verizon just announced 15,000 layoffs. The rolling 3-month ADP employment trend has been deteriorating badly, and job cuts have been rising for months. Revelio, who's an alternative labor source for numbers anyways, showed job losses in October as well, including big companies that aren't always captured in ADP. And this is not a balanced labor market. It is obviously weakening, like we've talked about, and the Fed risks repeating the same mistake now, staying too tight for too long. And because of that confusion that's inside the Fed, a December rate cut's looking less likely unless these backlog of reports that I talked about, once released, do show more softness and the Fed actually interprets it properly. Bill Pulte at FHFA, that's not the builder Pulte, did confirm they're actively evaluating 50-year mortgages as well as portable mortgages where buyers could move their current loan with them to a new property. And I've actually written some detailed articles on both topics that realtors and financial planners can use to really quickly understand how these products work and how to advise clients and inform them. But if you want copies, you can just DM me or Portable. Separately, Diana Olick is making the rounds again with bearish housing takes, but I wanted to share some actual numbers. Home values are up about 60% over the last 5 years, and foreclosures are still historically low. They are up a touch recently, but nowhere near levels that would be concerning. And housing's been one of the best performing assets in America for 85 years. So the shutdown, is over, but like I said, its impacts are going to drag on. And without fresh inflation and employment numbers, the Fed is going to have less justification to cut in December. And at the same time, the labor market is weakening faster than Fed officials are acknowledging. But have a great weekend, and I'll see you next Friday with another update.